Many factors have been blamed for Africa's slow economic development. Now, from the long hands of colonialism to corruption, lack of will by African leaders, absence of true African unity, inadequate diversification of the economy, and even foreign aid, the chains holding the continent down are enormous. Africa's financial institutions, nature of debts and loan repayment, the poor saving culture of many countries, failure of leadership, and many more are also issues to be ironed out to promote economic development in Africa. On VSA Today, we take a holistic look at these issues and perfect solutions to these age-long problems. Welcome to VSA. I'm Sulaiman. So economic development in Africa is an issue that can never be overstated. It's the greatest assurance of a secured future for every African, but currently not what many nations enjoy. As many African nations emerged from colonialism in the 20th century, development was expected to take some time. War and conflict haven't helped the cause of the continent as development suffered from structural collapse and disunited voices. From the battle for progression, growth, and development, how to run a good economy became a continental issue. Quality of governance became a critical issue. Nations hardly traded with each other. Corruption held sway as leaders dealt in capital flight, killing the local economy. Manufacturing and the extractive industry struggled to break even, attracting foreign corporations who hardly meant well for their host countries, forcing these countries to take up loans they hardly repay. Diversification of the economy is little on the continent, with revenues almost totally resource-based and affecting a vast services sector that could shape the future of Africa. Now you'll be asking the big question, why is this happening? Well, with me in the studio is Ejike Okpa. He's a Global Affairs Analyst, and Trevor Hambayi, Senior Partner with Development Finance Associates Zambia. He joins me from Lusaka. And from South Africa, Nimrod Zalk. He's the Industrial Development Advisor to the South African Development of Trade, Industry and Competition. Gentlemen, thank you very much for spending your time for the continent. Let's start with you, Ejike. I'm happy that you made it to motherland, as they say. The last time we spoke with you, he was in the United States. Now you are in Nigeria. Now let's quickly start by trying to identify the problems. What are some of the issues affecting Africa's economic development?
Well, thank you for having me. And I want to say hello to the other guests online. Since Africa, emerged from colonization, and it became a challenge because what is happening in various countries is, this internal conflict and lack of governance to build on what the colonial people might have left behind. If you look at Nigeria, for instance, if you look at Nigeria up until 1963, 64, you could see there was some sort of stabilized environment. But then when, the first coup happened and they went to civil war, things have just not been very well, for Africa. And, Nigeria is supposed to be an example of stability and growth, but somehow it has not achieved that. So the physical nature of Nigeria is very depressing. You look at the roads, you look at the water system, you look at the open gutter, even just to pick up the trash and process it and dispose it properly is an issue. And the same thing is applicable in every, I've been to Ghana, I've been to South Africa, I've been to Lusaka. It's just the same thing. On the sub-Saharan African nation, even Egypt, I also have been to Egypt. The same thing. And part of it is, the economic development plan. One of the challenges for most African countries, they don't have a cohesive land use pattern. Land use is critical because if you have uses that are in conflict with each other, you're going to create pressure on your infrastructure. For instance, on your water delivery, on your road, and on your power. So that means, for instance, you look at Lagos, for instance. Lagos, you can see anything anywhere. You could see a mansion next to a single family house, a hotel, single family. So if you were to provide water That means where a 4-inch pipeline can deliver the water, you now have to have 8 inches because everybody's tapping in. The pressure for the use, if you have manufacturing, you have a vulcanizer, you have all this stuff. And so that has created a conflict. And the only way you can tell a country that is doing well is from their land use. So when you fly into Nigeria, you could see the confusion. And that confusion is also because of the leadership. So for 50 years plus, Africa has gotten independence from most African countries. Look at Zimbabwe. I went to Zimbabwe in '96. And I felt I can live here. But since Mugabe, from '80 to whenever he died, Mugabe did what? Went south. Things that he could have improved on was destroyed. Again, what was the reason? It's tribal, and then the lack of local institutions. You know, African leadership is built on the personality, on the individual, not on the institution. And our democracy is more of a benevolent democracy as opposed to agency. So the president's mode of feeling is what dictates what happens in the country, as opposed to the United States where, you know, the president's mode does not. It may influence things, but the president doesn't order the road to be built in a certain way or water to be built, because these are agencies. So once the monies are appropriated and are authorized, they go ahead and do it. For, you know, like in the case of Nigeria, a governor comes in and the road project that was started prior to his coming to office, he might abandon it and want to do his own. So that's why you have so many uncompleted projects. In Nigeria, for instance, let's say Nigeria said, we're not going to build any more new buildings. Let's finish the ones that were uncompleted. It's going to take another 50 years to do it.
Well, let me quickly bring in Trevor. Trevor, Ejike has actually set the ball rolling, and he's also touched on leadership. He's touched on the people. He's touched on the confusion because of the kind of politics and, you know, democracy Africans practice. So we talked about the huge resources on the continent, and it almost feels like African leaders feel comfortable just, you know, mining the little they can and lending a lot of money. Are African leaders too comfortable to even look deeply?
Thank you very much, and good evening to my fellow guests. It's a very difficult situation, and this is a recurring issue on the African continent. The first thing that you see is an issue that our challenge as a continent is basically our governance structure. The key issues that we have with our governance structures is that our political systems seem to drive the interest of the politicians rather than the interest of the country. And you find that we have not been able to drive sustained development over a number of decades. That when you have a change of government on the African continent, everything that we had built before that is thrown away and they want to start again. So firstly, we need to have a very clear, sustainable economic development as a continent, which is saying where do we want to be by the year 2050? And we have a strategy to be able to reach this. And then you know what your benchmark are on an annual basis for you to work towards having to reach your target goal in 2050. So if you're talking about roads, you'll be saying that as a country, we want to develop 3,000 kilometers of roads. And for us to be able to do this by the year 2050, we need to do 300 kilometers every year. And this is the target that every government that comes must be able to achieve. Then we have got sustainable development that we are speaking about, rather than this cyclical circle that we seem to go around. Everybody seems to come around as a politician and they have got a brand new idea. The second aspect is, as a continent, we have massive resources for which, as a continent, there is no reason why we should go to the West to borrow any money. We need to be able to leverage on our resources for our resources to be able to speak to our best interest. But we have allowed the Western countries to come in here and offer us small peanuts for them to have exploration rights, for them to mine our resources, for them to drill our resources. and exploit those resources for the development of those countries that are outside Africa. But the resources are on the African continent. But this again comes back to governance, that the politicians or leaders that we put in office must protect the interest of the country, that we cannot allow foreigners to be able to exploit these resources without the African continent benefiting. And then we go back with the begging bowl to go and borrow for funds that have been generated from resources that we have generated in our own country. And I think these are fundamental issues that we need to be able to deal with before we can talk about the key policies that we are always proposing to put in place to drive the African economic development agenda.
Yes, we'll get there. But again, the good thing is that you've also been able to, touch on sustained development, which is also key here. Let me bring in Nimrod. Nimrod, listening to Ejike and Trevor, one of the key things that comes to mind has to do with who actually is unaware of what exactly to do. It brings us to, is it a case of those living outside the continent trying to pull the wool over our eyes, or the leaders on the continent, while not believing in the resources, human capital and even natural resources on the continent?
Well, thank you, first of all, Sulaiman, for inviting me onto your program, and to your other guests, Ejike and Trevor. I think I'd want to kind of take a slightly different approach to some of the opening comments that we've heard, and argue that we need a bit more balanced and nuanced approach to, first of all, thinking about what actually has been achieved on the continent, and also what is possible. So it's certainly true that there are quite overwhelming challenges, frustrations with political leadership and so forth. But it also is not all gloom and doom. There actually has been, over the 2000s, some quite significant progress across the continent amongst a number of countries, and that includes improved growth until the COVID-19 crisis, improvements in a range of indicators, health and education and so forth, together with a whole range of weaknesses, which probably central is the limited structural transformation that has happened on the continent, particularly progress towards industrialization. So I think we need to kind of, as I say, have a slightly more balanced view, and also recognize important differences across countries on the continent. So one of the things that has meant that the continent as a whole has not grown as rapidly as it could is that, to a certain extent, some of the largest economies, which include Egypt, Nigeria, and South Africa, have not performed particularly well. But there are a number of smaller economies that have been growing more rapidly. I think one of the big issues to think about is, why is it that some of the largest economies have not, or have performed perhaps in disappointing ways?
Okay, let me bring this to Ejike here in the studios. And Ejike, listening to Trevor and Nimrod, it comes back to the leaders, because for Trevor, he thinks that sometimes people outside the continent have come to mine, the resources, in Africa, to the extent that it leaves Africa, deprived. Is that the case? First, let's start establishing why we've not been able to unlock some of these key potentials here on the continent.
Well, that's true, because when you look at the 54 African countries, the question now comes, how many of these countries are trading with each other, even with the proximity of them having? On the global trade, Africa trade with the rest of the world is about less than 4%. But within the 54 Africa, because if South Africa is trading with Zambia, it's international, even though they are physically in a certain section of the continent. Nigeria, Ghana, Cameroon, and how much of that trade is going. It's not that Nigeria is a big economy by the virtue size of their population, but there is no tax structure to capture the volume of trade. So if you look at the federal budget of Nigeria is less than $40 billion. And 70% of that is coming from crude. So by now, you would have expected that the activities domestically would have been contributing 70% while oil is generating 30%. But that's not the case, and that has been the case for more than 50 years. So how do you change that around? And then you look at the currencies of the African countries. None of African country borrows from another. So Ghana is not borrowing from Nigeria, Naira. Nigeria is not borrowing from Ghana.
And why is that?
It's because, again, they have been programmed to think that, borrowing euro, dollar, the pound is the way out of the gutter. Now, you can borrow from anybody, but how about the stability of the currency? So since Naira has been falling, what does it do when you pay back? You still have to exchange the Naira to the value of your payment agreement. And so that's what is putting pressure on the foreign reserve. And the creditworthiness of most African countries is not very strong because they don't have financial resources. They don't know how to create money by financial instruments. So they are basically trading. And most of the things they trade is controlled by the pricing of people outside of them. If you read the book, Den of Thieves, the Black Monday of 1987, a bunch of Wall Street guys got together and said, let's go crash the economy. And what were they targeting? The commodity-based economies. So the oil prices fell, everything that you are selling fell. Because in Nigerian budget, sometimes when you look at it, they said, for our budget to do X, Y, Z, oil has to be trading at maybe $50 a barrel. Somebody can sit over there because Nigerians have no hand in controlling that pricing and hit it at 45. Boom. Already you're struggling. So what needs to happen with the African countries is what? Strengthen the local taxation, which is also governance. So if you have 200 million Nigerians spending $5 a day, okay, well, what does that mean? That's 1 billion of activities. For 365 days, that's $365 billion. If there's an effective tax structure and you're capturing 5 to 10% of that, isn't that more than what you're going to get from oil? But they don't have it. So when people say Nigeria is a large economy, yes, it is by virtue of the number of people here, but in terms of revenue back for public good, for greater good, it's less than, because that tax structure is not there. And then they are constantly being dangled with these conditions, come and borrow from the World Bank, come and borrow from IMF, do this and do that. Every country is entitled to stabilize their currency. And that's an internal thing. You don't have to go with the prescription of the World Bank. I mean, in the 80s, what did Africa get? SAP, Structural Adjustment Program, which sapped African countries. And since then, they have not recovered. Today, a Ghanaian with 1 million cedis has more exchange rate favorability to a Japanese who has 1 million yen. A Ghanaian with 1 million cedis has about $200 and something thousand. Why the guy in Japan has about $10,000? But you know the difference? The Japanese has local structure to build their economy.
Local structure.
Local structure Africans don't have. So all the mining you're talking about, how many engineering firms in Africa can actually build a tunnel? If Lagos were to decide to do a subway system today, chances are they're going to go to China or Germany, and they're going to pay those people based on their own expectation of their own money, and it's a pressure on your foreign reserve.
I bring you back again, Trevor. This is getting interesting. And I recall then you had said something on the show once. You spoke about, local economy, and now Ejike has also just touched on it. And he stretched it for us. He just told the world that Africans don't even trade amongst themselves. How is that for size?
A very interesting one, but let me just stretch it a bit to what Joko has mentioned. So the first thing is obviously mentioning the issue around the local structure, which is our tax structure, that we should be able to tax our nationals to a better degree so that we can generate a higher degree of domestic resources. Now, the key issue comes again, I think we'll go back to the issue of governance. The instance in where we are able to generate a higher degree of domestic resources, and then these resources are then handed over to our political governance system to be able to distribute the resources for the development of the country, and we still get a challenge there. So this is a two-sided challenge that we do have, because yes, we need to be able to generate a lot more resources, and in having to generate a lot more resources, we also need to have a better fiscal management in terms of how we manage those resources, which goes back to governance, that it is a standard on the African continent that political leaders will leave off the corruption, will be able to issue out contracts to people that are politically connected from the resources that are meant to develop the country. And this is a very big challenge. So we have to deal with this issue. We can come back to the issue around having to be able to trade with each other. And this is exactly where the strength of the African continent is that yes, we need to be able to trade a lot more with each other. But in having to trade with each other as African countries, is that we need to build the basics, which is the fact that we need to work towards industrialization of our African countries in terms of creating manufacturing, because we do not manufacture finished products that are of the quality that we Africans as well want to be able to use in our own countries. And this needs to be resolved, that we're able to build, to work towards innovation, to work towards capacity building, so that we can produce and manufacture commodities which we can then trade within our own African continent. It will also bring to the issue that one of the challenges that we have around trading within our own countries is infrastructure development. That if I want to fly to Nigeria right now, it might be quicker for me to actually fly to Europe and then come from Europe into Nigeria. There is no direct link that we do have between Zambia and Nigeria in terms of airport or airline connectivity to be able to do this. I think obviously Ethiopian Airlines does a very good thing about having to connect the African continent, but this is only the one single airline that has actually worked towards having to develop this. Otherwise, that is also a very big challenge, and it makes trading between the two African countries very, very expensive because of this lack of connectivity in terms of infrastructure.
Well, I think that's an eye-opening one there, because help us here, Nimrod, because it comes to diversification of the economy and how much of an interest the continent is putting on that. Has it helped any of the African countries as an example? For instance, we'll talk about cocoa, we'll talk about some other, raw materials, and people think that when they leave the continent very, cheaply, the finished products come in, in a very exorbitant rate, at very exorbitant rates. And take example again here in Nigeria, the crude is not being refined here in Nigeria anymore. It's taken outside, and even the derivatives are not even brought back. So how is it that Africa is not looking, as Ejike asked the big question, that even if Africa sets out to develop some of its key infrastructure, we also lack the expertise, for instance, the engineers. So help us here.
Look, I think the one thing is, I think it's really important, as much as the external environment is very challenging, and the world is not going to do the continent any favors. It is important to emphasize the need for African agency. I think if one looks at countries and subcontinents that have developed, they've done so really by asserting their own agency, building institutions, including institutions like their own development banks, in order to mobilize part of the finance that is necessary for the infrastructure and the industrialization that is required to grow. So I think that there are really tremendous opportunities for the continent to structurally transform, to add value, to employ more people in better jobs. Part of it does lie in adding more value to natural, agricultural and mineral resources. Part of it really involves the modernization of agriculture itself and exploiting opportunities to increase value and capture value in the agricultural sector. So one area I think that's particularly important is, for instance, the area of horticulture, fresh fruit, and and similar kind of produce. These kind of products can command very attractive prices in international markets. Whether it's citrus from South Africa or avocados from Kenya. So there is a real opportunity to add value there. There's real opportunities to add value so that the products that Africans want to consume, and many of which they import from the rest of the world, are actually produced on the continent. And that really is at the foundation of the ability of African countries to trade more with each other, which is really that they have to produce more of what each country is demanding.
Well, Nimrod, I want to stay with you before I come to Ejike, because you're the one who's also looking at industrial development at the Department of Trade and Industry and Competition. Some of the key things that Ejike raised about Africa trading amongst themselves, tell us what best the continent should be looking to doing, especially trading, doing business amongst, African countries, and also looking at how they can compete in a healthy way to drive the economy of these states on the continent.
Well, in my view, it's really about producing kind of complementary goods that, as I say, in fact, I think Trevor probably expressed best that African countries tend to export kind of natural or semi-processed minerals and agricultural commodities, and import consumer goods and capital goods. So we've got to start producing the goods that we demand. So I think part of it means looking at light manufacturing, clothing and textiles products, food and beverages. These are the kinds of things that immediately spring to mind. There is in fact more automotive assembly happening on different parts of the continent. So I think that's an important part of the equation. I think it also means that we need to have a more kind of strategic approach to African continental integration. So I think the dominant idea right now is that really countries just must lower their trade barriers, lower their tariffs between each other, and that is going to drive a significant increase in intra-African trade, but lowering tariffs, as much as that may be important between countries, is not going to deliver the production base that provides those complementary goods that different countries demand. So it's really an investment problem. Investment in infrastructure, investment in agricultural upgrading and modernization, and investment in manufacturing.
Well, earlier you spoke about Development Bank. Let me bring Ejike here, talking about Development Bank and also looking at the continent. The driving force of most of the economies on the continent are those very enterprising young Africans who also would need some form of help, either through some financial institutions like the banks and even development banks, as highlighted by Nimrod. Ejike, help us here. How can the banks or financial institutions help drive this development for the continent?
A good question. Look, at the end of the day, there are 6 functions of money. That 6 functions of money does not change. Okay, interest rate, simple interest, compound interest. One pay period when you're talking about annuity. Level annuity for your mortgages for your long term, future value and present value. So you look at the African continent. 54 African nations, none of them has a currency. Again, I got to go back to the money that is backed by anything. If they get fortunate because they have a foreign reserve that sort of helps them with their current account, import and all that stuff, you could see some stability. But once that starts to diminish or devalue, then everything goes up. So development bank in Africa, okay, let's talk about ADB, in Ivory Coast. ADB, what African country treasury backs it? None. So ADB is a subscription bank. Everybody puts some money in there and said, okay, hey, go ahead and lend this money on our behalf at these terms and conditions. So if the terms and conditions are exclusive to them, there's no alternative. There's no local African institution that has built capital formation or knows how to create financial instruments in order to be an alternative. Because, when you're borrowing, it's always the terms and conditions. If I'm giving you 5% interest on $1 billion over whatever period, and somebody else can offer you 2.5%, that's where the difference is. So the Africans don't look at terms and conditions. They just get excited for borrowing money, and that just keeps choking them. So because, again, there are no institutions. Look at all the African companies. How many of them are worth $1 billion? For a continent of 1-point-something billion. You look at the rand. Once the apartheid went away, the South African economy at the time was considered a survival economy because the world was sanctioning them because of apartheid. But once that thing went away, people started to look at the economy, and then the rand started doing what? The rand is now falling. So the rand that could have been the alternative currency for Africa is not a reliable currency.
For Africa, not for South, not even for South Africa, for Africa.
Yes, for Africa, because again, if World Bank comes in and offers you the dollar, the European institutions offer you the euro, but you can go to
an alternative.
And that alternative say, I believe in you. I am willing for this long stretch, and I'm going to stay with you. Because the cost of money is very relevant. I have served on the Texas Bank for Economic Development. I have served on the U.S. Treasury Department New Market Tax Credit. I can tell you how those things are used to create money. American money is not backed by gold or anything. It's by good faith. So, Nixon pulled that out of the bullion standards, and now they say, trust us. So for the African countries, they expect you to have a reserve, because we are not credit worthy. So every development we're talking about, let's go back to our currency. By now, African countries should have no more than 5 currencies. You have the West African region, you have the SADC, you have the East African and the Central African region. And there should be one currency, and you can look at the exchange rate, and they have some stability. Right now, there are 54 different currencies. So how do you manage their fluctuation in dealing with everything? And then we are commodity, again, let's not forget, we are commodity-driven economies. And, we get excited about having minerals and all this. Those are called unearned resource because there was nothing we did for gold to be in the ground. There was nothing we did to have bauxite in the ground. If we can improve on agriculture is a better test of improvement because you have to plant, you have to watch it come out of the ground, nurture it, harvest it, process it. But when you just found oil in the ground, all you have to do is suck a pipe and start to suck it. There shouldn't be any excitement with that because you didn't do anything. The reason the Saudis, the Middle Easterners have succeeded is because they are small population. So if people in Saudi, they produce 8 million barrels a day. If they sell a lot of it, they can afford to write a check of $10,000 to every resident. So just go do whatever you want to do. Nigeria cannot afford to do it. South Africa cannot because we are 200 million people. You have to be producing maybe 30 million barrels of oil a day, which again is not possible. So we have neglected an aspect that can capture the human resources resident in Nigeria and in the neighboring country in order to have what? Developed regionally. All this international, you have to secure your neighborhood. Like I said, Nkrumah was talking about Pan-Africa when he never secured the plate. And that has created a problem for African countries. They are always outward looking and not looking inside without stabilizing their currency and the interest rate. You go borrow money in Nigeria, what are they going to charge you? 25%. And it's not an amortizing debt, it's only interest only. Some companies that brought in commodity, we go buy some cement or sugar, come to the wharf and people are buying, and the banks is financing that short-term trading. But the test of an economy is, for instance, in America, I can borrow $1 million for 30 years at fixed rate. What does that say? Confidence in the dollar. But Nigerian banks will not even lend you money more than past 1 year. So how are you going to survive? If you're a businessman borrowing money at 20%, you have to make 3 times your interest rate in order to pay back. Whether it's interest only or amortizing. And nobody's doing amortization loan in Africa. So development bank in Africa, ADB is not a viable institution. It doesn't have stock. Nobody buys stock into that institution. It's a subscription. You go look at it, Japan, America, everybody is giving them money to lend to Africa, and they are lending it at the conditions they want.
Let me bring in Trevor here, and time for us to start talking about solutions.
Yes.
I'd like for you to react to what Ejike said. Then, then you can start talking about solutions.
The financing component is a very interesting one. I think what I do see as a challenge on the African continent is that we are so focused towards consumption. If you look at our financing portfolio in our capital market, is that there are very few African countries, if you're looking at the financing portfolio in the capital market, that you find that half the money that is in the capital market is borrowed by government in domestic debt, and they're using this to either supplement their budget or for purposes of consumption towards social spending, which does not bring a return. And then there's a very big portion, around 20%, 30% of that portfolio, which is in the capital market, that goes towards having to give consumer lending. This is where they are basically lending clients that will pay back on a payday loan for purposes of consumption. There's a very small percentage that remains, which is around 15%, which is what we are putting into the productive sector, for the private sector to actually borrow from this. And there starts our initial problem, is that we are taking resources to be able to finance consumption, and the lending institutions can only do this on a short-term basis. And this is why this is driving the interest rates to go up, because we are borrowing for consumption. If we're borrowing for development, capital investment, the interest rates should be a lot lower to allow you, and they must be stable to allow you to be able to invest for a 5-year project, a 7-year project, so that this is a capital investment and you can work towards having to get a return. The only people that come and do this is foreign direct investors who come with external financing, and they've got interest rates that are low, and those interest rates are in the 6%, and we are not able to compete with them, and they're investing for the long term. This is why they're actually doing they are the ones that are investing in mining, the major projects around. If they're doing private partnership projects to do rail lines, to do roads, because they've got that investment and they can wait a long period of time. You can't do this at 25% of interest. And this is a challenge that we have from the domestic perspective, that we need to work towards this. The second one that you see is in terms of the African continent, in terms of the trading. So I know recently, obviously, 2020, 2021, the Africa Free Trade Zone Agreement came into play, where we can try and trade between the African countries. The challenge that you firstly will have is the fact that most African countries are single commodity dependent, that there's one commodity that brings in 70% of all their external revenue, which is foreign exchange. And from this perspective is that if they're having to trade between themselves, it'll be very difficult, because there'll be a greater degree of loss of income, because they are not diversified in terms of the export products. And this needed to be resolved. So you have seen this Africa Free Trade agreements come into play a couple of times. There was one in West Africa, one in East Africa, there was one in Southern Africa, but they have all failed since the 1990s. And this is because of the disparity in the income levels between the two countries when they start to trade. That's why we need to be able to get to a balanced trade. And that is the problem that will come to the issue that Joko is raising around having regional currency, that the regional currency stability is only valid if the countries that are actually in that system are trading, have got a certain degree of equilibrium in their GDP, or in terms of their capacity to be able to do this. Otherwise, there starts to be an imbalance, and this then starts to speak to the disadvantages with another country. And I think those are the key issues that we really need to trade. But as African countries, we need to be able to look at the basics that will get us to a position where we can be competitive on a global space, which is basically having to deal with the basic issue, is that we need to be able to add value to our primary agriculture. We need to be able to have innovation around our primary agriculture, so that we can increase productivity, so that we can lower the cost of production, so that we can increase our capacity to be able to generate these products, and then we can trade on a regional basis. And the basics are so important before we start to look at having to advance our economic agenda outside our borders.
Well, Nimrod, I think it's safe to ask the question: is Africa truly, most of the African countries, truly a single commodity, based country? Because if you look deeply, it looks like it goes back again to how we started looking at the leadership, some kind of, laissez-faire attitude that some of the leaders bring into bear. Because if you look keenly and deeply, every country on the continent, 54 of them, all have more than 2, 3, 4 to actually, put their fingers on and make the economy, running.
I think that the picture is a little bit more mixed. So it is true that African countries are quite commodity dependent. Some are extremely commodity dependent in terms of their exports, but I think it does vary, and there is some diversification. I think that also, commodities in and of themselves are not necessarily a bad thing. I think it really depends on how strategically those commodities are managed, and in a range of ways. So, one really big macroeconomic issue is, how do countries, try and capture some of the windfall gains when there are these periodic commodity booms, and save part of that windfall in order to direct it towards the greater diversification of their economies. I think, again, there's a strong potential link here with development banks that some of those commodity windfalls can be directed to building up the balance sheets and capitalizing development banks to play more of a long-term investment role. Obviously, again, the taxation of those commodities is an important issue, and that talks to issues like clamping down on essentially base erosion and profit shifting, through which the tax that ought to be paid on commodities is not fully paid. It also talks to how countries can develop linkages from their commodity base. Sometimes that's feasible, sometimes that may be less feasible depending on what those commodities are. I think that, but broadly speaking, I think that the issues are better approached from a point of view of what is possible, rather than listing all the many difficulties and impediments and internal and external challenges. So part of it does, in my mind, require a shift in thinking. That starts with what countries have and where, what are the feasible kind of ways in which they can leverage and build on what they have in order to build a more diversified and dynamic economy.
Let me bring in Ejike, and it has to do with what we hear many Africans, or rather African leaders say, talking about or addressing Africans in diaspora, asking them to come back or come home and invest locally. Help us here, Ejike. How does this translate into a boost for the local economy?
Well, let me talk about remittances and then
Yes.
FDR.
Yes.
Remittances, you've seen reports that float out there to say so much billions are being brought in by Africans, outside of Africa. But the challenge with that money is it's not a targeted sector. If I were to come into Nigeria and say, I am investing $5 billion into the energy sector of Nigeria, that is more impactful than $40 billion of Nigerians remitting to Nigeria. Because now what it does to the investing world is it signifies confidence, or power, or water, or any specific stuff. So we shouldn't be putting attention on the diaspora money. I'm working on a concept. In fact, when Obasanjo got into office, his economic advisor, Magnus Wako, at the time, I had written a concept on how to leverage and create an African sensitive focused fund in U.S. Because that's what other countries do. Africa has no Marshall Plan. When the World War ended, a lot of the white Americans who were Europeans did the Marshall Plan. So you could see, even when the World War ended in 1945 or 44, in less than 20 years, all the European countries were what? Up and running. Because of the Marshall Plan. Because there was somebody over there in America who said, we're going to have to go rebuild you. This is how you're going to do it. And it changed things. Up until 1999, Europe was like Africa. Every country has its own currency. And they were all over the place. They created Euro. And then they started inviting countries. If you do X, Y, Z, you join in. If you remember at the time, it wasn't up until 2004 when they were planning the Olympics that Greece was at the time struggling. And they said, okay, if you do X, Y, Z, you join. And that's why they lent them so much money. And then, of course, they collapsed because they gave them more money. So we have to have that local magnet. Who is the local magnet in Africa that attracts African interest? It's not Nigeria, it's not South Africa, it's not Kenya, it's not Egypt, it's not Ghana. Everybody is looking outward. And I mean, a lot of these things are already written. I'll give you an example. When Ronald Reagan came into power, interest rate in America for capital goods, capital improvement was running in the double digits. And they passed what they call the usury law, that you can't charge certain interest rate on certain projects. I mean, of course, our credit cards carry 20 to 20% because it's unsecured. It's based on your creditworthiness. But I borrow money at 3%. I'm working on a project now, and I mean, they say, hey, we lend you $5 million for 38 years at 2.5%. If I can take that money, come to Nigeria and lend it to them at 7%, and I will strangulate Nigeria because, I mean, I'll be making more money and not doing anything. So it's the interest rate, the national assemblies or government, national legislation. They don't have to wait for the president. They have to invite the governor of the central bank and say, do X, Y, Z. Every country is entitled to the sovereign power and value of their currency. They don't have to yield to the prescription of anybody outside to say, oh no, you can't do that. So we have to have balls. If you read the book, 3 Days at Camp David, that was when Nixon, with 15 men, in a weekend, changed the direction of the dollar. And now the dollar is about the store of wealth for the world. Everybody measures the economy based on the dollar. Because Nixon was afraid the people that America owe money was going to demand so much gold, and America didn't have so much gold to pay them back. They said, we're out of this. African countries start to do that. Tell the foreigners, this is my home, this is how I'm going to do it. If you don't like it, tough luck. So far, there's no African leader that has the balls. Excuse my French about balls. They don't have it. Is it Nigerian Buhari? Is it the guy in Uhuru? Is it the guy in South Africa? Who is the one that's going to stand up to the World Bank and the IMF and say, no, we're not going to do it? If you're not going to lend us money at these conditions, and peg it. So if our economy is gaining, you gain with us. If our economy is falling, you fall with us. Instead, what is due in this choking loans, they say, how much can you pay? Oh, okay, we can pay this. Okay, keep paying. And they're piling up on the unpaid interest on the principal. So you started borrowing 1 billion, you end up with 20 billion. And but I mean, you have the Paris Club and you have the London Club. And those people, they're all trying to choke Africa. So my thing is, the solution is this. Invite Africans that are outside of this continent that have had some knowledge about these things and start to say, this is the prescription. The people that come into Africa don't have long-term interest for the African survival. And you don't blame them. You have to start to say, this is my solution, or we're going to do it because we are entitled to. Remember when Naira was strong? In 1970 to 1977, Nigeria attracted more corporate relocations to Nigeria than any. What was that? Because Naira was good money. And then Naira started falling. What happened? They checked out. Nigeria built a gala, remember? Volkswagen. Who killed it? Nigerians in collusion with people from PAN, Peugeot Automobile of Nigeria, because they were afraid of market share. These are things Africans do. It has nothing to do with what a white man or Asians that are telling them. Is the African weakness to yield to foreign interest. And then at the end of the day, they are stepped on. We shouldn't be doing that. We got Africans now have graduated from top universities anywhere in the world. We should go back and say, this is how we're going to do it. Or if you don't join us in that partnership, tough luck.
Well, I sincerely hope, gentlemen, we can continue to have this kind of conversation to spur and also help, leaders across the continent and even experts so that they can better understand that, Africa has it on the continent. Africa can actually bail out some of the countries from outside the continent if only they listen to some of the key things highlighted by all three of you and other experts outside the program. Well, Africa's economic development is in the hands of Africans, and what we do is what the rest of the world will take from us. It's time to be more productive and proactive. It's time to build a path for greatness. Well, thanks again for being such a nice company, Ejike, Trevor, and how come? And Nimrod. I was going to lose that. Apologies. Thank you, all three of you, for being such a nice company. We'll do this again. I'm Sulaiman. Bye-bye.